Hi, I'm Garth McKenzie from traderscorner.co.za, and this is your weekly look at the S&P 500 and the Nasdaq indices. As always, we start the week with a look at the daily chart of the S&P 500 to see what's been happening there recently. And what you can see from looking at this chart is that the market does seem to have recovered off of the lows that we saw last week. Over the last couple of weeks, the market has been correcting. That S&P 500 moved down by 10% from the 1st of September down to the recent low that we saw last week. And the market has managed to perk up quite nicely since then. So one does get the sense that that corrective activity is probably over for now. You'll notice also that yesterday's trading activity saw the price pushing up above the 50-day moving average for the first time in a couple of weeks, and that's quite an encouraging sign. There's some overhead resistance evident there on that chart at 34.25, and that needs to be taken out for a further move to the upside to develop. But let's then zoom in on the hourly chart of the S&P 500, and that will show these levels a little bit more clearly. So if we take a look at the hourly chart now, there you can see the significance of that 34.25 resistance level that I mentioned in the previous slide. You can also see at the lower levels, 33.25 is quite a significant support zone. Last Monday, there was a gap to the upside, and that's indicated on the chart over there. And thus far, that gap up hasn't actually been filled. So that potentially is quite a bullish indication. So for the time being, we've got support at 33.25 and resistance at 34.25. The market would need to push up above 34.25 to validate what is looking a bit like a crude inverted head and shoulders pattern over there. And if it can get up above 34.25, then it opens the potential for this market to actually go back up and retest the highs that we saw at the beginning of September. So that's going to be crucial for that 34.25 area to be overcome. If we then move on to the Nasdaq 100, here you've got a daily chart, and you can see there very similar trading activity in terms of the shape of that graph to what we were looking at a moment ago on the S&P 500. You can see also nice corrective activity during the month of September, but the market does appear to have pushed up off of the lows recently. There we've got 11,600, which sits as quite meaningful resistance on this chart. You can see indicated there as well that I've got labeled a inverted head and shoulders pattern. So two shoulders on either side of the head in the middle. And that pattern would be validated on a move above 11,600. Let's then zoom in and have a look at the hourly chart of the Nasdaq, and it shows it more clearly. So there you can see the inverted head and shoulders pattern, again, quite clearly spelled out there. There was also a double bottom pattern that formed in the middle of September, and the market seems to have moved up off of that level. Again, last Monday, we saw a gap to the upside on the Nasdaq, and that gap has not been filled. So if that remains unfilled, that's probably quite a bullish sign. But this Nasdaq really does need to push up above 11,600 in order to validate that inverted head and shoulder structure. And if that happens, if we see this market move above 11,600, then that would be a bullish development, and it would open the possibility for the Nasdaq to go back up and test the highs that we saw at the beginning of September. And you'll see that there is also still a gap open from where the market broke down in the beginning of September. That gap could potentially become a target if this market were to start gaining and pushing out through that 11,600 neckline of the inverted head and shoulders pattern. So those are the levels to watch for this week. We've got 34.25 as resistance on the S&P 500. We need to watch that carefully. And on the Nasdaq, we need to watch 11,600. Those are both pivotal levels that we need to see these markets push through in the week ahead if we are going to see the potential for further upside to develop. That's all I've got for you this week. I'll be back again next week with another look at the S&P 500 and the Nasdaq indices.